Hello, it's Thursday, August 9th, 2007. This is Brian Shannon speaking from Alpha Trends. Let's go ahead and take a look at the markets. We had another ugly day, and seems like I've said it a couple times here recently, but it seems like the only thing that stopped us selling today was the closing bell. If you look at this daily time frame, I've been pointing out that we've got a 10-day moving average below the 20, which is below the 50-day moving average, and they're all declining. To me, that means the short-term, intermediate-term, and longer-term trends are lower, and this market is guilty till proven innocent. We've just seen a 3-day rally that was a very nice bounce within this primary downtrend, but it came up to a place where typically there is resistance found, and that would be near that declining 20-day moving average. That rally came on diminishing volume. The diminishing volume means that the buyers weren't as aggressive as the sellers, and there's still a lot of uncertainty in this market, and that's what the market hates, is uncertainty. So you've got to continue to be very careful in this market. Your higher probability trades are, unfortunately, if you're not used to selling short, are going to come from the short side of the market, because the primary trend is lower. So what we want to look for are an alignment of trend where we have the short-term time frame lower as well. Now today was pretty choppy once again. We had a big gap down. It seemed as though it was going to hold above that 5-day moving average and the prior level of support over in here. But that initial strength failed to hold, and then we had kind of a meltdown into the close here. So again, just it's a market that should really be only traded by the most aggressive traders who are very skilled and disciplined about taking losses and honoring your stops. Now, if we look at the 1-minute chart, what I pointed out intraday on the Qs, and we'll take a look at that again, was that the daily VWAP, the volume weighted average price, is the average price that each transaction has occurred. And you can see early on it was trending higher. Then it started to flatten out. That market broke down. The VWAP became resistance here, and the sellers really were able to just press this market lower once that daily VWAP was broken and it started turning lower once again. The odds were for further downside. The path of least resistance in this market is once again down, unfortunately. Now, looking at this 5-day moving average that I place a lot of emphasis on, it looks like it's just more neutral than anything right now. But I think that you've got to look at this also as, since the Federal Reserve met right over in here, this market is now down, and that means that anyone who bought after the Federal Reserve announcement is now losing money. That announcement came right about here. So if we take a VWAP line and go straight across, the average transaction since the Federal Reserve meeting has occurred at about 148 in the spiders, and we can see that more clearly right here if we just take that right across like that. That's the volume-weighted average price. So anyone who's basically bought after the Federal Reserve announcement has lost money. Now, we've got the market testing those levels. So a potential level of support. You can also see that we've got maybe a little bit of Fibonacci support in there as well. But the primary trend is lower. So these levels usually will fail. Now, again, it's a market for aggressive traders only. So otherwise, it makes for a fascinating conversation and to look at. But most people, I still believe, shouldn't be involved in this market. The risks are just too high. There's a lot of uncertainty. There's the fear of the unknown out there. And we've got a downtrending market. So let's take a look at the semiconductors. The semiconductors, these guys finished with a loss of 53 cents. That's 1.3%. So about half the loss of the S&P 500. As I said yesterday, mainly I'm considering this market to be neutral. We've got a lot of back and forth action in here. It looks like it's trying to find support. That 50-day moving average is starting to flatten out in here, and that kind of confirms the neutrality of the market. Looking at a 10-minute time frame, we got back above that 38 level yesterday, and I thought that maybe 37.80 was going to act as support. Once again, this market failed as well, so the path of least resistance in the short term is back to neutral to down. And taking a look at the IWM, which is actually the IWM closed last year and last year at 78.03. Today we closed at 77.86. So the Russell 2000 is down on the year. And that's the only market that does that. And some people have been saying, well, it's sector rotation. Well, I don't see what they're rotating into. To me, this is more reason for concern because the magnitude of the breakdown and the fact that it rallied up and found resistance along that 200-day moving average, it wasn't able to recapture that. Now, we had lighter volume on the sell-off today. So we're getting kind of mixed volume signals in the IWM relative to the rest of the market. But we've still got a downtrend. And again, price is the only thing that pays at the end of the day. We've got a declining 10, 20, and 50-day moving average. So it's time to continue to be very careful in here. And I was saying about some people were saying, well, it's sector rotation. And I don't see what they're rotating into. Certainly they're not rotating into the S&P 500. They're not rotating into the semiconductors. And they're not rotating into the Nasdaq 100 either. So don't listen too carefully to this sector rotation theme. Instead, look at it as here's a market an area of the market that's led this entire bull market of the last 5 years, and it's starting to show signs of being very weak, and that could spill over to the rest of the market as well, meaning that it led on the way up. Perhaps it's going to lead on the way down, and it seems to be for right now. So continue to be very careful in the IWM. Let's take a look at the intraday picture there. Intraday picture isn't quite as bad, and I'm not sure I'm getting all the information in here, but it's not quite as bad as the S&P 500. You can see that it did lose 2.2%, but it's still above that 5-day moving average. So I'm going to say more neutral than anything in here. But because the path of least resistance is lower on the daily time frame, expect news and surprises to generally follow the direction of the trend. The Nasdaq 100, this is becoming a lot worse. We've been giving it the benefit of the doubt because of the direction of the 50-day moving average, and it's slowly starting to flatten out. The rate of ascent is slowing down, and we've had that 10 below the 20, so it's more neutral than anything, but benefit of the doubt to the buyers because of the direction of that 50-day moving average. I'm going to say generally, though, that scenario is over. We saw resistance where I had expected it to be found from the Monday video at $49 a share. The market rallied up to that level yesterday and backed off. Again, you can look at the Fibonacci from this Monday's lows to today's high. That was violated. It looked like it was going to hold there at the end of the day. But again, these little intraday Fibonacci levels, they're okay to look at for traders, for aggressive traders, but for position trading, pretty much useless when you're looking at the intraday time frames to base your decisions. So this move, and typically the way Fibonacci goes is if it pulls back more than that 61.8% move, then you can consider it a failed move. So you can look at this whole Monday's lows to Wednesday's highs as failed. Now it's pretty close to that area, but still, we want to look at this again. And here's something else important to look at is I was mentioning the possibility of this being looked at as a double bottom, which the height of the pattern was about $1.50 that would give us a target of $50 a share. That's what I outlined yesterday. But I also said that you have to be very careful about coming up with upside targets because you don't want, what you want to do is you want to make sure that the pattern of higher highs and higher lows is what you base your decision on. You can't just look at this and say, I'm going to buy it at $48.40 and put in my sell order at $49.90 or $50 a share, whatever your target measures out to. That's not the point. The point is you have to be observant about strong money management skills, and that means when it starts to break down, you've got to throw that theory aside and move to the sidelines. Again, let's take a look in here at the VWAP since the Federal Reserve meeting. Average price has been about $48.40. People are generally losing money who bought since that Federal Reserve meeting. So this was the chart that I put on my blog earlier today, and it was right about, let me just change the trend tool. It was right about here, and that's where I'd said, looks like this VWAP is acting as resistance, and hopefully some of you took that as a maybe a reason to get short. I bought some of the QID right in here, so it turned out to be a good day on the short side, and hopefully you guys are participating.